Hey, everybody. Happy Wednesday. Welcome back. It is the 21st. Let's get started for a little daily profit plan. I'm going to take one of these slides here. I did this in a summary, I think last week or the week before for opening playbook. Risk reward changes everything. Quadrants of trading. Did I share this with everyone here in daily profit plan? I'm not sure if I did, but we'll talk about it in a moment. I was going to take one of these slides. I'm going to take this slide here and post this in my summary. So here are my services. There. So services and then kind of the reward to risk and the setups that I have. Crash insurance is my highest reward, lowest risk service, but that is obviously like really low win percentage. We probably win like 10 to 20% of those trades. Double ups, about 60% wins, but typically we're going after, 8-to-1 setups, 10-to-1 setups. Engineered options around 70%, newsbreakers 70+%, pinch point about 84%, project options edge, I bumped it up to 97+%, daily profit play around 89.3%, waterfall about 95%. So, these are based on win percentages and reward to risk. All these you can make money. Okay. So just following the process, even if you're taking a bit more risk than reward, you can still make money. Or obviously you can balance that where you have a slightly favorable win percentage, like a 60-70% win percentage with a 1-to-1 or better. And you can make money there too. I would recommend that with any trade strategy that you have, this is where you want to be. Somewhere where it's like, I don't care how I get the job done. I've had a motto in trading, nothing creative. It's just whatever it takes. I don't care how I need to make money. I just want to do it, right? So daily profit plan today. Let's get the chat up and running for everybody. It is good for everybody now. It is. Okay. Everyone can post to everybody. Yeah, to everyone. Okay, good. All right, what's happening, Bill? Ernesto's here. Larissa, Lester, and Donna. Good morning. What's happening, Blake? All right, Catherine's here. Phil's here. Stephanie, good morning. Hey, Wade. Hey, Dan. What's up, Tony? All right. Hey, Alan. Hey, Buck. Okay, so let's just get right into Marcus' little top down. I shared this yesterday. I posted a video in Telegram as well as YouTube. Hope you had a chance to check it out. This is the S&P 500. We're doing some technical breakdowns. This is a rising wedge I was watching. I think that the S&P is a little bit more of a pronounced rising wedge versus the NASDAQ. If we go to the Qs, similar structure where you take these recent levels, maybe get this thing kind of like pinched off here. Now, typically that would be an ascending wedge, which if the market can break above that, there's more upside. But if you take, I don't know, like kind of this structure here, and we're breaking down like that potential rising wedge structure inside, high to low. The NASDAQ to me, left shoulder or head to neckline, and this is kind of the right shoulder that's been, a bearish pattern in the making. To me, this is maybe a symmetry move. I'd say worst case scenario is you take the low here and then you measure it to the downside. It's funny because it really goes back to the stuff I've talked about for the last couple of months, which is, going into 2026, we're going to have corrections. Where would be our key levels? Key level here for support and key level here for support. Okay. So if I'm measuring this move, and I don't want my chart to be super messy here, but I will just show you how I'm going to measure this. There's two ways I would take this high to low. This high to low right here, and then you drag it down to symmetry. So we just poked from this high to low. Everybody see what I'm doing here? I'm taking this high to low swing, and then we have our recent top just over the last couple of weeks. Measure that symmetry. That could put the Qs down to this 200-day moving average. That puts us down to, I think this is a 10-month moving average. And that puts us to about 576. Now, from those recent all-time highs, that would be a move of about 9.5%. So if the S&P gets to that, like, let's say 7% correction, the NASDAQ is probably going to be closer to 10. If the S&P gets to a 10% correction, then the NASDAQ's probably closer to 13 to 15%. There's naturally more volatility in the NASDAQ than there's the S&P. I did take a nice trade yesterday on Project Options Edge for the SPY. I was going to look at something similar today on the Dow. I'd rather trade the Dow or the Russell versus the Qs right now. We are seeing the VIX still hanging out. Where is my VIX at here? So that's my Netflix. Netflix is down, which is annoying. But the trade I put for newsbreakers yesterday is a broke wing butterfly, and it's pinned to 88. So if Netflix by the end of the month can rally back to break even or better, we got a profit trap in there for a couple of bucks, which would be a nice winner. We'll see. It did have positive earnings. It just kind of came down to this structure. So hopefully there's not too much more downside on Netflix. I think we're already down peak to trough like 35%. So I was kind of looking to get somewhat bullish into earnings. It's down 35%. Now it's going to be open up like closer to 40%. Hopefully that is a gap that wants to get filled here in the next couple days. There's my engineered options. Let's see. Starting point. All right. And then this is going to be the VIX chart that I was looking for. Oops. So the VIX is at 19.1. We flared up to about 21 yesterday. I thought it was a good idea to sell some premium. I want to take a quick peek this morning. Again, the market could sell off a little bit and the VIX could climb right back to 20. We could have this interesting like island VIX here between 19 and 21. But I'd like to take a stab at the Dow. Probably similar to what I did on the SPY, maybe building out a ratio spread from a product options edge using this low, going out probably closer to the end of the year and building. This is a 370. I'm going to try to find the exact low from Liberation Day. 367. So Dow. Okay, so the 367 low, which means I probably want to play like a 370 or 365 put. And could I build in a buffer, maybe do like a 400 by 370? I think that'd be a pretty good trade if I can get it. That offers me a profit trap of 30 bucks or so, and then I can still get some premium. And obviously, I don't want the shares. If I get the shares, I'd take them, but I don't want the shares. What I want is for this structure to hold. I want this market, even if it's choppy and nasty and sideways, it just kind of hangs out here, and we just get a nice income trade. Okay. So I'm going to take a look at that this morning for Project Options Edge in the Dow. See what type of premium we can get. I think between Dow and Russell's probably a bit more vulnerable as far as volatility goes. But if I don't know. I'm begging the question, like, are we going to cut rates as aggressively as the market thinks? Because yields aren't going down. And one thing that the US 2-year, so the 2-year yield is hanging out about 3.58%. This doesn't give the Fed a lot of room to cut if this goes higher. If the 2-year goes higher, this is ultimately what is kind of always seen as like, this is where the Fed should be. If we don't have a monetary policy that's manipulating the markets with monetary policy and changes up and changes down, we've obviously seen like a roller coaster ride of rates, right? From COVID, we cut rates to near zero. 2022, we raised to 5+%, and then we've cut down to 3.5 right now. I think we're 3.5, 3 3/4. The 2-year is at 3.58. So despite all the drama, we're sitting just around the 2-year rate, which is considered kind of like the neutral rate. So if the 2-year yield goes higher, I do think that the academic side of the Fed will really put up a fight for cutting rates. And I don't care who the new Fed chairperson is. I don't know how influential Donald Trump can be as far as like stacking the Fed, but you have other members in a full council that's like, look, we can't cut rates, because if we cut rates into a rising 2-year yield, they're going to flip around and have to raise rates at some point. So, the Japanese bonds are dropping. The Japanese yields are rallying. There's threats of the repatriation going on globally. Now we're playing with fire when it comes to pissing off our allies with the European Union and Greenland. So anyway, there's all sorts of stuff going on, and this is like escalated geopolitical tensions, right? Now, one thing that Donald Trump is very good at is making headlines and escalating everything. So this talk of Greenland, this talk of tariffs again, it's like, you notice how the Supreme Court, this was like the 3rd time that they haven't done it. That was supposed to happen yesterday, I believe. I just stopped caring. I stopped caring. Like, whenever the Supreme Court deems that they're unconstitutional or they're going to uphold the tariff policy, I don't know. At this point, I don't know if it's good or bad. I think it's going to be noisy. If anything in the market, if they're like, oh, right, tariffs are unconstitutional, and the U.S. market comes back in a big way, I think it's a fake out. But at the same time, I feel like the U.S. already has a plan for however they vote. If and when they vote, and the Supreme Court says this is what our decision is on tariffs. There's already a backup plan to, I don't know, raise tariffs or do it all over again. I have no idea. So just be prepared for some noise. That's all. I want to talk really quickly. So today, um, I did ask this yesterday. I had a lot of responses. I plan on running a masterclass today for, let's do this. How many of you would like to jump into a masterclass? Trying to think what time is better. I could do a masterclass around like 11 a.m. so we can kind of wrap the session up and then jump right into a masterclass for engineered options. Or we can go like 12:30 where I ran a class last week at 12:30. That seemed to work out pretty well. Any preference for everyone watching? If I've got engineered options students, if I did a class at like 11 or a class at 12:30, does one time work better than the other? Okay, and it's going to be on consensus. Okay, so I've got a couple 12:30s, got a lot of 11s right now. A lot of 11s, a lot of 11s, a lot of 11s. All right. I don't know. All right, keep it coming. It's time to get. It's kind of mixed. 12's the average. Buck always looking to compromise. Here's my kind of executive decision is we are naturally in this session until about 11 o'clock anyway. Um, I do think I'm gonna have another pop-up webinar today, and I don't want that to overlap. So I think what we'll do is we'll wrap this session up. We might take like a small, like 15-minute breather. And I'll probably start the live class today at like 11:15 a.m. So I'll mention that in Telegram, but I'll do a engineered options 11:15 a.m. Eastern time masterclass today. I'll sprinkle in another one if we need to. But I wanted to talk about, look, I recognize that the market right now is in some pretty terrible alignments. I warned this to trade this week. I am still trading this week. I still posted trades. I'm still in those trades. But I told you that the alignments are not good, right? We crossed over on the 1 hour chart. This is a 1 hour chart here. So we're bearish on the 1 hour. We're bearish on the 4 hour. And the daily, like literally coming into yesterday's trading, the daily was sitting right at the 50-day moving average. So I thought, okay, I will, kind of like when you're playing Texas Hold'em, if you ante up and you go around to betting, you want to see the flop. It's like I kind of wanted to see what the market was going to do at that 50-period moving average. And what did the market do? It dropped below it. So now that makes the market more vulnerable to some more downside. That being said, this market could clearly fight back for the week. There are some inefficiencies here that I will show you. Take a look at the S&P right here. Okay, now I don't know if this is going to be immediate, but notice how the S&P is rallying this morning. So we're getting futures market popping up 0.42%. I don't know what Trump is saying because he's at Davos right now, or Davos. I don't know what's being said, but the market's clearly reacting in some way, shape, or form. Notice this inefficiency. I mean, the market could still pull back into this area before sellers start to fade it, which means for engineered options, we could still see a rally this week and still see a nice winner on engineered options. So I wanted to participate with that 50-period moving average, and that's, it's a 2-star, 2 stars here, 0 stars here, 0 stars here. So usually when I'm looking at trading engineered options, I want a 6-star alignment. I have 2 this week. So I said trade with caution, which I am. So my trade size is small, and I'm basically kind of banking on the daily to give us a winner. If it does, great. If it doesn't, okay. I obviously traded poor alignments. Now, that being said, I wanted to also discuss, are there other assets you would like to consider putting this on, i.e. gold? Even if it was a monthly position on gold, one thing to think about is this could work very, very well in a gold position, even though you're going to subject yourself to more volatility. One of the probably, best trades, in my opinion, is going to be gold doesn't want to stop right now. And even though it's defying what I see technically, XAUUSD, I think that gold probably has room to get to 5,000-ish. All right. I'm putting a massive like yellow light. It's a lot of caution before we come to a halt. But we are 21% away from the 200-day moving average. And if we get to a 25 to 30% stretch away, I'm not going to sell it. I'm not going to short it, but I would be calling a very short-term top or a much needed correction. Okay. All right. Do you ever keep your clock in Utah working? It's always on Eastern time. I never think of even when I lived across in Asia, I always thought of Eastern time. So yeah, like 11 a.m. Eastern time. So that way it's right after the session. Okay. Anyway, we'll talk about if we like participating like week to week or month to month, I think gold could be a pretty interesting discussion. So we'll do that today in addition to the core strategy for engineered options. So 11:15 today Eastern time, engineered options masterclass. Let me throw that in here, and I'll put that in for the Telegram as well. 11:15 a.m. Eastern time, engineered options masterclass. Cool. All right, so I'll post the Zoom link for members inside Engineered Options Telegram, and I'll see you at 11:15. So we'll get a small break in between this session and that, and we'll jump right in. What else? Sold some premium. We got the market coming up in 9 minutes. We are up a little bit today. So futures is up to, I'm seeing 0.35, probably some intraday volatility. Let me check futures really quickly. Yeah, I mean, so the weekend gap, I mean, just be mindful of that. The market may want to come back and try to test that. So if we see, down below the 50 period and then right back up to it, look, it could be still difficult to get back to all-time highs. I'm not gonna test that, but if we have a rally back up here, try to find this gap area. If sellers are really serious about taking this market lower, especially with a rising wedge type pattern, then that's a perfect spot for sellers to come back in and push this market lower. Okay. Now, does that take a day or two? Does it take a whole week? I have no idea. But to me, the structure is right now based on the rising wedge. Path of least resistance would be this market tries to find 6,600, 6,500 area. How does it get there? However, the market needs to get there. It could be a straight line. It could be gaps lower. It could be, intraday sell-offs. We don't really know. But after an inefficient day yesterday, we're hopefully going to see, something efficient today. We got a plus minus 53.4 today with the VIX around like 2021. I'm getting a nice little P&L swing on the day so far, which is nice. So I've got 53.40. Keep that in mind for our SPX trades this morning for daily profit play. Gamma levels. Okay, we'll keep an eye on this one. 68.45 will be a pretty important level. That's going to be our positive and negative gamma pivot point. If the market makes a recovery type day, I mean, we've got a swing of roughly 54 points. So we closed around 67.96. We could be up to 40.50 today to the upside, 68.40.50 to the upside. We could be also down to fresh lows, right? Hopefully what we have is a way to make some profit on daily profit play by getting some volatility and some efficiencies. So we'll keep an eye on this. Let me set a chart alarm inside of this gap. So if we get above this close, this is where the candle started. This is where the previous candle closed inside this area. Let me set a chart alarm here trying to be a gap fill. So that would be potential. That's a pocket touch, gap fill potential. Set that on futures and then see if this will get tested. So tested, I think sellers would be waiting. If we fill it and go right to all-time highs, this is nothing more than another, freaking buy the dip, man. Like 2-3% correction, right? So from this high down to yesterday's low, 3.17%. Okay, we'll see what 3% means. Could 3% be a rally to the highs again? Maybe. And again, what this will cement is the significance of a 50-period moving average. Okay, but little caution. We closed below the 50-period here, and we did get to the 100. So we closed below it here. So could we get to the 100? Sure. I'm not holding my breath for all-time highs anytime soon. Okay. So we'll see. Right now, I think that when we're in negative gamma, which we are across the board, like very negative gamma right now, for the day, it looks like we kind of neutralized it, which that's kind of also the reflection of how powerful zero DT can be. There could be some aggressive squeezes today just to try to cover in a zero DT, squeeze where like for the day the market's up and then it fades for the rest of the week. We don't know. But this is why we don't, you know, guess. It's like we trade what is given to us. We trade the day, and hopefully daily profit play will give us a trade and a fill that we want. Okay. He wouldn't use force to take Greenland. So, I mean, it's good. At least there's some sanity to that remark. European Union says he's not going to take Greenland by force. Markets up. Okay, good. Yeah, I mean, you can probably call this the taco, right? Markets down, so we're walking things back a little bit. And this is what Trump has been very good at. He makes very aggressive, boisterous claims, and then he quickly walks them back. So I feel like that's maybe a lot of credit to the council around him. I mean, we've seen a 4% swing in 10-year yields. That rate of change is not a good look for the bond market. Japanese yen has been a little volatile. The Japanese yields have been rallying to fresh highs, forcing that like potential unwinding of the carry trade. The Bank of Japan's probably going to raise rates this year versus cut rates. So this whole stuff is happening in the background. Like the fiat system has all sorts of currency risk. The bond markets, I mean, this is the threat of like repatriation. It's like if money's going to return to their respective debtors, it's like there could be a lot of flows back into Japan. I'm long Nikkei for that reason. I've been long Nikkei since last year, which worked out pretty well, but we'll see. I still like the US because options and liquidity is better than every other market in the world. But as a percentage allocator, if you just had, non-US exposure, I think that's a good like 5 to 10% of your portfolio could be non-US. Okay. Let's see here. Doug says, I have a debit spread on Netflix. It's hit hard pre-market. I sold the January 23 86 call and bought the 81. So I sold the January 86 call and I bought the 81. Okay. Okay. I mean, so what do you want to see? You want to see by Friday that price is up to 85, 86 then, right? I mean, it's an earnings play. I think what you might get yourself in trouble there, Doug, is you might not have just gone out long enough in time. You basically said, well, this is the week of earnings. I'm going to trade it around earnings. And we're gapping down to 80 on Netflix, right? So pre-market is 82. I have a butterfly spread that as long as we're back to like 87 or 88, I've got a profit trap in there. So I'm trying to think. I've got no risk to the upside. I have a butterfly spread and then my risk. So my risk is like $100 or something, $113 risk. I pulled in, or no, I did it for 40 cents. Sorry. So I've got 60 cents of risk per contract. 40 cents is my credit. I put on, 5 contracts. So it makes me a couple $100, but my profit trap is worth $500 in addition to, that'd be like $2,000 and my $200. So if we're anywhere around break even I did mine on the 30th, which is the end of the month, just because I know that typically earnings can be quite noisy. But they did beat earnings, which is good. What you're going to want to see today, Doug, is, you get it. It's Wednesday. You get 2 more days of expiration for you. If price is going to quickly come back and fill the gap, that was an 87 close, right? So if we're back to 87, I'm not sure what you paid for your bull call spread, but you're probably going to see some profit if we fill the gap. So I'd set a chart alarm at 86, 87. If it gets tested, see what your thing's trading for. And the timing on Friday, it's like if we fill that gap really quickly, that could actually work out very nicely in your favor. So just keep an eye on it. Chart alarm set at $86 or $87. That would get you what you need by Friday. I don't know if I'd hang on to it to close, though. If we come back and test that level and your trade is positive, I probably just take the profit. I'm going out a little bit further on my end with the 130 expiration. Okay. Good there. Good there. All right. I'm not that interested in what Trump is saying. It's like I'm happy that the market is going up. I'm sure there's some comments that are leading to that. That's fine. But again, we are doing some structural damage where if this is a rising wedge, we've broken below the 50 period moving average. Unless we're going to have a move like this where it's test the 50 and then get right back above it in a couple days. This could be just breakdown, come back and try to test that inefficiency, and the market's going to roll over. I think it's going to be difficult to reclaim 7,000. Okay. All right. We're officially at opening bell. I want to take a quick peek. So we sell the plus minus. It's all the way down to like 38 points today. I'm going to keep that kind of 50 points in mind. Okay. VIX is at, let me go to VIX is 18.5. We're getting some pretty big retreating on the VIX off that 21 handle. Let's have a look. Let's have a look and see what we can get on our levels today. So daily profit play. Can I get an 85 by 90? That's an 11 delta. Can I go 55.50 here? That's 85 cents. All right, I'm going to throw this guy in. We're pretty neutral at the open. We might have a squeeze. So big gap up. I want to make sure, like, if I'm selling above, where's my call side? 68.85. Yeah, I mean, we've got neutral. The positive and negative gamma pivots around 45. So let me see if I can get this thing to give us a buck. Okay. Pending order coming on daily profit plan, daily profit play. That's an 85 by 90. Excuse me. Right now we're trading around 90 cents. Okay, let me get some real-time gamma. If we're getting a pretty aggressive squeeze to the upside, that dollar should fill. Hopefully it will. Okay, so I've got the 68.45 positive negative gamma pivot. Yeah, this is a good way to start the day. Come on, let me see. I actually I don't want to take less, but let me see if I can get 90 cents. Take on just a tiny bit of risk here. Because I like the trade. I just didn't get filled yesterday. Let me see if I get 90 cents. I'm going to leave this at 90. So I'm going to edit the alert. I'm going to say 90 cents, 90 cents to $1 credit. I just like the dollar because it's, even number, and I can play around with some defense if I have to. Let's see if I did 85, 95. If I went 10 wide and 10 wide, this isn't too bad. I'm going to try this one for a buck 55. I'll go 10 wide, see if I can get filled for 10 wide. All right, bear with me. So I'm trying to go 85 by 95 call side, and then 67.50 by 40, 10 wide, trying to get a buck 50. Come on, man. See it spiking up to 158. All right, I'll try 145 final offer. Don't be a jerk. And it's really going to make me chase it a little bit, isn't it? Okay, I'm in for 140. Update. This is my trade for today. So previous alert, canceling the $5 wide. $21. So I'm 10 wide on that one that just got filled. 85 by 95. $1.40 credit filled. Okay, I'm in for a buck 40. Um, Give or take, yes. I mean, if I did the 85 by 90 and I did the 50 by 45, right now that's trading for about 75 to 80 cents. You know, that trade is okay. The only reason I'm willing to accept a bit more risk at a buck 40, I'm risking 860 on the trade, but it's also it's a lower delta. I mean, I'm getting like a 10 11 delta based on the inefficiency yesterday. This is what tends to happen in daily profit play is the market not cooperating for an expected move, and then today it can. It's like that's likely going to be our situation. Okay, so the advantage of widening the spread is I can get more credit. I'm obviously taking on a bit more risk. I'm taking on an 860 risk to make $1.40. My plan is with this $1.40, if I get this thing trading down to like, honestly, if I get it trading for like 50 cents or less, 40 cents or less, I'll just take the profit on the day. Okay, nice. You got filled a buck 50, Stephanie. Good. Okay, so yeah, I mean, like I said, kind of finessing the trade. It's like I want $1 on the 5 wide. It's just going to be difficult to get. So I decided I like the levels. I like the 10 delta, and um, hopefully we get a decent amount of premium for that. Okay, so all the way down to 67.50, which looking at current levels in gamma, um, we have a 50% ATR up here at 68.34. We have a 50% ATR down here at 67.60. I mean, so price after the gap up, it's like we'd have to not only fall all the way down to fill the gap today, but also fall down to the 50%. My hope is that we have an efficient day. And from this open, the pre-market was a plus minus 54. So we had a plus minus 53.40. And I'm taking advantage of that. And when the market opened with the VIX being down, it all of a sudden was reduced to like a plus or minus about 35. So we're way above that, below that. Hopefully that will hold. 20 to 80, right? 85. So I'm almost double the expected move, right? So we open up here around 10. That would be a 75 point move for me to threaten the upside. And then from opening here at 10 going down to 50, that's a 60 point move to the downside. So hopefully that's enough with a plus or minus 30, 35 that we're going to, survive this and get a nice little win on the day. VIX is going up. Yeah, we'll see. I mean, VIX should be going up, but the S&P is going up. So in fact, what I really want to know is like, is the VIX going to break the 21 handle? I feel like with comments from today from Donald Trump, it's like quit while you're ahead. Say something that the market likes and then leave the microphone. Don't make it worse. So we've got positive, negative gamma here at the pivot points at 68.45. 50 plus percent ATR. Looks like it's right within a shot to 68.34. Even if we get all the way to the 100% ATR, that's still below our daily profit play. So on my chart, again, and there's risk on the day. My trade's all the way up here to 85. So for our trade, let's recenter this at what was the close? It was 67.96. So recenter 67.96. There we go. So based on the gap higher, VIX is, we got an 18.81 VIX. We had a morning VIX around 20.81. So 1.3%. I don't think it gets there, but I'm still, mindful of this as the opening price. So let's go here, 1.3%. So about 69.05. And that's a 20.81. And the VIX is retreating, so it's going to be difficult to fill that level today. But good to know. And then we take our close yesterday and then go 1.3% lower. Close yesterday here, 1.3% lower. That's a 6708. Okay. So 6708 would be down here. And I'm going to set that chart alarm on the VIX up above 21. Because if we get above 21, then I need to adjust my potential low because the VIX would be higher than my 20.81 that I'm calculating now. Okay. So where I need price to stay for my daily profit play is going to be below, because my trade is in. So I need price to be below 68.85. So there. And I need price to be above 67.50. 67.50. So you can tell by my blue lines here that it's, we're kind of trading right in the middle, and I need price to stay above this. I need price to stay below this. Based on this as an inefficiency yesterday, I'm hoping that the market will do exactly that. So if it opens up here and stays, great. If it opens up here and then gives it all back and tries to get worse for the day, that's crappy. However, I could, because I went in for $1.40, I could probably play with some cheap protection, and that might be actually what I do. Is I might try to sacrifice some of my daily profit play for some protection. Let's see how cheap it is. So I need the 50 by 40. Let's see what protection looks like below 40. So if I did a buy, sell, buy, that's a broken wing. No credit offer right now. It's probably better to do. If I can avoid the debit from a butterfly spread, I could do, this would be pretty cheap. 35 by 20 by 5. I mean, this cost me 25 cents to make up to $1,400. So if we're dropping down to 67 and change today, what's my low that I calculated? 6708. If we come down to hit this low in any way, shape, or form, it's going to cost me $25 to make potentially $1,400. I'm going to take that trade just because it's so cheap that if it does help me have some downside protection. So if I can get this thing for 20 cents, that's a pretty awesome defense trade. All right, it's not filling for 20. Hopefully 25 will fill. All right, filled at 25 cents. This is a defense trade, and it's totally optional. You don't really need it, but you're going to be thankful if the market is going to, if the VIX is going to go up again to 21 plus and the market's going to fall, that trade that cost me 25 cents could pay me up to $1,400. And all I need price to do is fall into that trap. I've got basically a 30 wide profit trap from 35 to 20 to 05. That's 30 points wide, and it cost me 25 cents. So I'm adding a cheap defense trade. So SPX 121. That is the buy 67.35, sell 67.20, and buy the 67.05, 25 cents debit. This is a very low risk trade, offering 14.75 profit with defense below the put strikes. $1.40 on DPP, 25-cent debit. On defense, net profit potential for the day is $1.15. Okay, so if I sacrifice that 25 cents, then I can still make a buck 15 on the day. And that's likely what I'll try to hold to. Is I'm not worried about the defense trade if it's not going to work. I just want to make sure, like for my $1.40, can I let that essentially go to, $100, $105 profit, $110 profit, get something close to a winner on the day. Okay. All right. So we'll keep an eye on that one for the remainder of the day. That's good. Now that we have the VIX retreating a tiny bit, my Dow trade might not be as attractive, but I'm going to try it anyway. Dow with the 367. This could be a project options edge trade if the premium is decent. December, let's go end of the quarter, end of the year. Yep. Okay. So we can go three. Let's see what a 400 by 370 gets me. That way I have a $30 profit trap. If I own the shares of the Dow, it'd be below 340. If I want less income, there's $300. There's $400. There's 404. I mean, this trade is pretty good. You got a 97% chance of profit. You got a $500 profit trap. You'd get a $450 income play, but you don't really have much of a profit trap if you took assignment. This trade, I'd obviously be sacrificing some of the upfront profit. Like I'm sacrificing about $200 of profit. However, my ownership price, if I want to own the Dow, 370 minus 30 minus 245, I'd own the Dow at 337. Okay, 337 on the Dow from current highs. That would be, I got to go lower. Look at this. Okay, again, I just think it's a high probability income trade. So 337, we'd have a 32% correction on the Dow before I took any ownership. If I took any ownership, I'd be glad to own the Dow at 30+% off. I would repair it for a couple $1,000 pretty easily. Okay, so let me see if I can get this trade in for a couple of dollars. 286. I like this one. Buy the 400, sell the 370. If I want a few more bucks to the 375, I'll take it here. I'm going to try to get, let me see if we get, as long as we get like 220 or better, hopefully 245. Let's try this one. 245. Uh, 266 fill. Good. I'm happy with that. Okay, so let me get this in for some of my margin accounts. See if I can get filled at 260 on this one. Yeah, I'm getting filled at 265. Okay. Interesting. Try 260. Filled at 260. Okay, good. So let's see what the general fill is for this, and then I'll post it for Project Options Edge. Oops. Okay. All right. Just going to double check these accounts. Make sure I didn't double dip on this real quick. So twos and ones. Give me a second here. So average fill was 260. So this is a ratio spread. This is a ratio spread. So I bought the 400 by 370 for 266. $400 by 370 for 245. And then I set it where I get this one should be 260. There is a trade for 265. All right. Let me get this posted for Project Options Edge, put it in the tracker. New trade, DIA. Uh, 260 to 265 credit. Okay. I'm willing to own DIA if price is less than 370. A repair with covered calls for income. Or hold medium to long term with a 35% discount from all-time highs. Break even price. We have a 97% chance profit on this trade. Actually, 99% chance profit. I like that even more. Assignment risk would be potentially like a 10% assignment risk, but break even price on assignment would be 337.55. Actually, it's going to be 337.35. You don't want the shares. The 370 put looks like it's trading for $3 right now. See what that filled at. Filled at, I'm sure I'm going to fill at 485. Filled at 485 credit. So 485. Closing at 1455 debit or 1940 debit. Okay. Trades in. Nice MP. That's good, Mike. Post just finished talking. Okay, cool. Yeah, no, I'm happy with that fill. That 226. I mean, it showed 240 at first. Now it's the bid mid ask is pretty wide, but 265. I'll take that for an income trade with a $30 profit trap. All right, let's go to Project Options Edge. That is going to be trade number 94. Okay. Good stuff. All right, that trade's in the tracker, trade number 94. It's in your Telegram as well. Put it in here. New trade. Trade 94 is DIA. Done. All right. Well, that makes things kind of simple. Live gamma, anything above 68.45 is encouraging, although I could see it being very short-lived. So a rally up to this level today, positive, negative gamma. If the market stalls here and rolls back over, the good thing is I don't think we're coming all the way back down to these puts. So I think that our daily profit play is probably going to be a nice winner today. That's the plan, obviously. So we'll keep an eye on that for the day. Okay, good stuff. All right, let's open up some questions. We got daily profit play running. Keep an eye on that. Do I feel like I need some defense to the upside? I mean, I need if I'm going to defend it to the upside, it would be like the 69. It could be very cheap to also defend this, but I obviously don't mind having it. Let me take a look. So if I defended my upside trade today, right now, for so my upside is 68.85. If I defended with like the 69, let's say 15. So if I go 6,900, 15, and 30, that's obviously a bit more expensive. I don't really want to sacrifice 50 cents on that trade. It's a low probability trade, which is why I'm not looking to make it super expensive. Even going 10 wide, it's 40 cents. That's crazy. Let's go 10 wide here. So I get $1.40. If I take away 25 and 25, they give me a net winner of 90 bucks on the day. I can let both of those go. However, if price gets up to 6,900 or so, this would also have a profit trap. I mean, going 20 wide, it's like it only cost me 50 cents, but I'm trying not to sacrifice my daily profit, which is a higher probability trade. So 05, that's 15 wide for 40 cents. It's 10 wide for 30 cents. This one's not terrible. 15 wide for 25 cents. Choices, choices. So this would be somehow if we had upside risk, which I don't see as necessarily getting above 6,900. I don't see anything on my, on my gamma levels. It's like we could get to 85. We could run up here to the 100%. But we've seen it before. Upside risk is very real in today's market. I don't think this is a terrible trade. Let me see if I can get this thing for like 25, 30 cents maximum. I really don't love this trade, but I'd still make like 80, 90 bucks on the day. That's better than obviously taking on risk of like, oh my gosh, I'm going to lose on my daily profit play with my risk being to like 860 bucks. So for 30 cents, can I get this filled for 30? I'll try to get this filled for 30. See if that'll fill for 30 cents. I don't want to go more than that. So 25 and 30 would be a 55-cent decrease, 140. So I still make 85 bucks on the day for daily profit play, which I'm fine with. All right, I'm going to leave that at 30 cents. Let that fill. So the reason I'm doing that is because if price for some reason decides to go ripping up above 6,900, I have a profit trap right up here that is worth $1,500 and it costs me 30 cents. Right? And down below this, if we start dropping to like 67.50 or 66, whatever the low is for the day, 67.50, if we're below that, I have a $1,500 profit trap that costs me 25 cents. So I can cover my 860 of risk by having those very cheap butterfly spreads to the upside and downside. Okay. Do I always do this? Not always. But yesterday wasn't exactly a standard day in the market. We have a bit of an outlier move, and sometimes this market is so reflexive that it's like just aggressively, buying the dip. Okay. So I'm going to keep that one for 30 cents right now. And just to, I mean, it's trading mid at 30. Come on. I definitely will not go over 35 cents. This should be filled at 30, but I'll try 30 as 25 cents. Come on, dude, fill at 30. All right, I'm just gonna let that hang out. I think it'll fill at 30. If this market stalls, that should fill at 30. That'll be a defense trade. Okay. And again, like I don't think I need it, but it's better if I have it just in case because the profit trap is big enough that I could wash wash away into the 10 wide risk. Yep. Hang on a second. So it's not filled yet. Not filled yet. Adding top side cheap defense trade. That's the 1025, 1025 and 40. That's 6910, 6925, 6940, 30 cents debit. If filled, this brings my net DPP profit down, but I'll have 1470 to 1475 potential protection against a max 860 risk on DPP. So I mean, mathematically, it's better to have it than not. You got filled with 30 cents running? Okay, good. Dave, did you get filled at 15 cents? I still haven't been filled yet. Not yet. Okay. All right. I'm going to keep it marinating at 30 cents. I'd I'd like to see price like stall and maybe get it filled for 25 cents. Anyway, we'll see. So hopefully a little stall get filled at 30. But if this thing makes a run to above the 100%, if it gets into 6,900 plus, anything above 6,910 is profit trap zone. That's it. Look, that's a big move. That's a crazy inefficient day if we have that. Most likely the result for the day is going to be this. I win daily profit play for $1.40. I sacrifice 20 cents here. I sacrifice 30 cents here, and I still make 85 in the day per contract. Okay. That's most likely going to be the net result. But to have the ability to cover my risk if price is up above here or down below here to cover my 860 risk with up to $1,400, I mean, I can walk away defended and profitable. Filled at 20 cents. What, dude? Dang, Smokey. Okay, that's good. I'm glad. I'm not getting filled there. I'm seeing the mid at 35 right now. I'm going to keep it at 30. Did you go 15 wide? So 10, 25, and 40 or 15 wide, you got filled at 20 cents. Man, I find that hard to believe on the call side. Usually those call sides are a little juicier for the debit. You did a 1-2-1. Yeah, but what are your strikes? I want to know how wide you are. Like I'm going 15, so I've got 30. I've got a 30-point wide butterfly trap. Did you go less than that? Did you go 5 wide? Did you go 10 wide? Like I just don't know how you're getting filled at 20 cents when the debit is I'm showing 25 as the bid price. That's I mean it's probably trading for like 35 or 40 cents right now. Ben Guess says got filled at 20 cents. Could have gotten 15 if I waited. What? Catherine, 15 cents debit. Good Lord. I need to trade me some Think or Swim, huh? All right. Anyway, I'll let it sit for 30. You guys are getting filled at 15s and 20s. I'll let it sit at 30 and get ripped off. It's 10-cent debit on the put side. So did you do this? Buy, sell, buy. I see what's going on there. I mean, if that fills for 20 cents, that is kind of crazy. Let me see if that fills for 20 cents debit. Filled to 15 cents. All right. It's the same trade. It's defense. It still works. Really interesting. All right. So now I've got profit protection. Let's go cancel. Let me analyze that trade really quickly. So the 69.40, 40, 25, 10. Yeah, I mean, if it's in that profit trap, you get protection. Otherwise, it's gonna cost me $15. So yeah, if you want to do the put side, that's cheaper versus the call side. Yep, you do puts, you get fills for 15. So now I'm only sacrificing. This actually worked out great. So $1.40 on daily profit play, minus the put side protection and minus the so bottom protection, top protection. I'm only sacrificing 40 cents, which means I can net $100 on the day if my daily profit play is a full winner. So I'll take that. But if we're inside this profit trap between 10 to 15 or 10 to 20, pin price is 25. That makes up to $1,485, which obviously wouldn't suck. So all right. So we've got defense above, defense below, price for the day. We'll see where we're at. I don't think we're gonna go surging above 6,900 though. Anything is possible, but probably unlikely. Okay, so for today, we opened up around 68.10. 21. We're doing the 85 by 95. $67.50. Okay. Let's see here. Market going up exactly like you said. Wait to see if it goes down later. Miss trading upward. Yeah. Yeah. I mean, based on the inefficiency, it's like the market, I can just see a couple things happening, right? This is a good thing to show like it's going to be challenging for the market to fall all day just based on current volatility. I mean, could I see the market hitting that positive negative gamma pivot and then stalling? Sure. So we have a big sell off yesterday. Market, and this is what market makers do best: is we see a big outlier type day. What they tend to do is they tend to exaggerate the expected move, and then they sell a ton of premium on days like today, so they can kind of recover what they had hedge out yesterday. So it's very rare that we see multiple days in a row where an outlier type move that is beyond the expected move is going to have 2-3 days in a row. In fact, that's rarely the case. So I mean, we still have to trade with precaution. Don't ever bank on a certainty, but this is why we win 90% of our trades. We pick our battles. Surprisingly, like even with the sell off yesterday afternoon, I still didn't get filled on my daily profit play. And if we did, it's like the numbers that we selected yesterday were still safe. But unfortunately, because it was later in the day, that sell off after noon was not enough time left in the trade to get us filled with the credit that we wanted. I did buck, yeah. Yep. So let me go. Yep. So the upside defense trade, I'm switching those to puts. Look at I'm just going to do an edit here for 10-10. So put and put that filled for 15 cents. Filled using puts since the fill is cheaper. Now, if we win full DPP for $1.40, I'm sacrificing the 25 cents and 15 cents defense trades, and we'll still net $1 profit on the day. Okay. That was edited in Telegram for Daily Profit Play 10:02. So that latest post is the one I just updated. So I just switched it to puts. It got filled at 15 cents. So you got filled at 310 in that 250. What was the result on that, Catherine? Was that a 250? Did you lose 250? I don't remember where those strikes were at for the day. Let me see. Yesterday for 250. Where the heck did it go? Hang on. I guess I'll look at Telegram, huh? Wow, actually, where did we close yesterday? 76? Or I'm sorry, it was at 90. We did close at 96 or 97. That would have been a small. Yeah, that would have netted a small loss then, right? So the 250 spread, it was a 6,800. So 250 minus 6,800. Oops, crap. 6,800 minus 2.50. So that was your break-even price, and we settled and closed at 96. So let's say we settled at 90. It was like 96 and change. We'll just round it to 96. So 6,796. You instead of losing the 250, you'd have lost $1.50. Less than $1.50 on the trade. That is the nice thing about trading SPX and XSP is it's cash settled. So if you let it go to expiration, it just settles exactly at the number. So you know whether you're positive or negative based on that line in the sand. This is what's nice about having, even though I don't do this very often for butterfly spreads, when they do cash settle, you can do the exact math on what that trade is. So if you're anywhere inside that profit trap, at the end of the day, you can calculate exactly what your profit is. Yeah, so like $150 on the trade. All right. So far, daily profit looking good. I think the net result for the day is going to be, like I said, we'll win daily profit play. I'll sacrifice the upside for 15 cents. I'll sacrifice the downside for 15 cents. Now, to be like fully prepared, if price is greater than 6,900, okay, I have a profit trap that's up here. If price is less than 6,750, I have a profit trap that's down here. If price is below this level and above this level, which right now we're trading right in the middle of it, we have a win. Okay. So for today, if we come back and fill the gap, we actually have a lot of profit potential up here. If we stay inside the trading range and stay within an expected move for the day and maintain an efficiency day, then we'll win the daily profit play. And this is a small loss. We still net $1. So even if you did all this with one contract, it's $100 on the day. If you did this with more, it's like, I think the likely winner is going to be $100. You're not going to get charged bucks. It's SPX. There's no assignment fees, right? There's no assignment fees. Like it'll settle. If you want to close it, you can close it. But remember, like SPX, if you're going to close it, the lowest denominator you can close it at is 0.05. So if you close it at 0.05, it's the same thing as the assignment fee that's going to be $5 at the end of the day anyway. Right? But there's no assignment risk. It's just the settlement will be, they'll close it out and charge you like the CBOE fees. Okay. My Tasty account doesn't charge a exit commission. It just charges like the CBOE like assignment fee for like $2 or $3. Gex by 685. It's going to be different. I mean, 685 gex would be equivalent to. Let me take a look at this. So right now, look, I'll give you the big levels on my gamma. So right now, 6860. 6860 is going to be my kind of upside gamma resistance. And we have the 25, 6825, 6800 would be our potential support. We're trading at 46 right now. If you go to SPY gamma, there's your 685 gex, right? There's your 685 gamma. So 685 SPY is comparable. I'm not saying it's the same, but it's comparable to the 6860 in the SPX, which right now is about 13 points away, or about 270 away on the SPY. Yeah, I mean, that makes things interesting. Look, this is what you got to love about the markets. It's like we had a 3% correction from all-time highs, and the market is basically right back above the 50-day moving average. Now, the question that I'm asking, of course, is it going to stay there? Is the market using this as a chance for sellers to line back up and de-risk again? It's very possible, because if it's not, if this market goes right back to all-time highs, then it is seriously like just plan on like every dip is bought, which is not the case, and that's not a good strategy. But look, I'm never excited about a 2 to 3% correction. For me, when I get excited, I'm ready to deploy some decent capital. Is when we get like a 5 or 10. 5 or 10, I'm pretty excited. I'm ready to sell some premium. 15, 20, I'm starting to load up and stack up some trades. Okay. One of my favorite trades, and this is happening a lot more the last decade. One of my favorite trades is when we have a VIX. Okay, let's say that we have the VIX at like 25 to 35 plus. Now, this is the kind of the play for the VIX is going from 15 to 19 or 15 to 20 is just a little bit of added volatility. We typically see like a 2 to 3% sell off in the markets that that run from like 15 to 20. If we go 20 to 30, that's when you start to get like the big fat corrections. That's when you start testing like maybe 8 to 10% corrections, maybe 10 to 15% corrections. Anything over 35, you can look back on the VIX and see that very rarely do we sustain moves over like a 35-40 VIX. Okay. The VIX outliers would be like 40 to 60 plus, right? I think the all-time high was Great Financial Crisis. We were at like 80 something VIX. Liberation Day was up to 50 or 50 to 60 VIX. Volmageddon we saw back in summer. It would have been July to August of 2024. That was like a 40 to 50 VIX. So those are outliers. And, it's, you have to have the courage to participate in the market. That's the hardest thing. You have to have the courage to participate. It's never trying to pick the bottom. Okay. What I'm doing typically with VIX at these levels is I'm doing premium selling, and I'm doing out of the money stocks, ETFs, indexes. Well, I should say stocks and ETFs that I would gladly own at a massive discount, or I do indexes, so index spreads and stacked and staggered expirations. Okay. So for example, last year, I still have trades that are running from April of last year that I had. So April's decline in 2025, we went, 20% peak to trough. VIX spike to, 40 to 50. I want to say we'd like a 40 to 50 to even 60 VIX when it all kind of topped out. You're not necessarily getting to trade that, but when it comes into like some of those big gaps we saw during early April, like Liberation Day, I don't remember what day it was. It wasn't April Fool's Day. It was like April 2nd. And then over that weekend, the market was down, 3, 4, 5%. We had like a 15% decline just in the month of April. And that was within like the first 7 to 10 days, right? So the big wick you see on April of 2025 was all the first like 7 to 10 days of trading. And then the rest of the month it spent just grinding back. So what I did is I went out of the money. and I did a ratio spread. I did naked puts. I did ratio spreads. I bought shares as well. So I bought the SPY, bought the Qs. I did ratio spreads. I did naked puts, and I staggered these. This would be so combination of bull put spreads and naked puts, buying shares, and ratio spreads. And I used November expiration, November, December, end of year, which is still December, and then January expirations. So a lot of my gains that I've still been benefiting from have been because of that giant correction we saw in the market last year, March and April, participating and selling premium, staggering expirations. I had stacked. So this is like a combination of between the Dow, between the NASDAQ, between the S&P, between the Russell. I probably had 30 plus trades stacked up between these expirations on those assets. And I'm still getting paid on those. Okay. Now, does this happen all the time? No, but this is where my patience is rewarded. So this is why I say I don't mind having the market ever correct. Okay. It's never fun. And I don't know if this is going to be ever like a guaranteed trade. Like, let's say that, we have Liberation Day 2.0 and the market drops 20% and then it does something like this. Market's down 20%, then it goes up halfway and then it drops another 10 to 15% lower. Well, that's going to be a lot more painful than calling the bottom right here, which is why when I'm taking these trades, I'm taking this low and I'm going further out of the money and hoping that I don't have to get the assignment. And typically what I like to look at is if I can say I'm going to take ownership at 30% or lower. So 30% off, 40% off from all-time highs I'm talking about, even 50% off. So if I traded the S&P, the NASDAQ, the Russell, the Dow with a 30 to 50% discount, the odds of those getting assigned are pretty slim. If they are assigned, the gain to the upside is, this is like 60% upside, 80% upside, 100% upside. All we have to do is get back to the highs. Now, that's not going to be immediate. Like, that's what was so weird about last year's. And I said this literally in like middle of April. I'm like, if we get back to all-time highs, this might be one of the dumbest corrections I've seen in the market because it felt like it was self-inflicted. Did the markets need it technically? Yes, but how it happened, I thought, what a like irresponsible way to like crash the market, pivot. And honestly, there was probably just a bunch of insiders that made just a crap ton of money. I just read yesterday that somebody, with the news over the weekend, somebody made like $100 million buying puts on the SPY. I'm like, this, and again, I don't know if that's really insider stuff or if that's like somebody had an oversized like hedge position that got paid out, but they've lost, money hand over fist from previous hedges. I have no idea. You can't get the full story on social media with stuff like that. But if it's truly insider stuff, like if Nancy Pelosi can make hundreds of millions of dollars in her trading, it's like there's clearly people that are in the know. You got the CHIPS Act stuff, you've got the semiconductor space, you got people buying into Intel before the government takes a stake in it. It's like, you can get mad about it or you can, just trade. It's like, that's all noise. The market will make you feel like you're never good enough. The market will make you feel like you're never smart enough. The market will make you feel like you're never doing the right thing. But if you're making money, you're doing just fine. Okay. So anyway, and I'm the type of trader I'm never making like 100+% of my account. I manage enough capital that if I'm doing, 20 to 30% for me a year is really, really good. I'm very happy with that because I'm not taking a ton of risk. I can keep that type of return profile with maybe getting single digit drawdowns. And I'm very happy with that. So for me to try to push for like 40, 50, 60% upside, I'm probably taking, 10, 15, 20% drawdown, maybe more. And that's never fun. So I try to keep that pretty tight. Anyway, does this make sense? So this is why when we're talking here through the year, if we see a correction of 10%, of 15%, I'm looking at it as an opportunity. Okay. If we see a 20% correction, I'm looking at opportunity and positioning. And then if I'm looking at actual ownership, I want to see some discounts that are even heavier. Sure. Give me let the market melt down. Give me a 30, 40, 50% correction in an index, not individual stocks. Individual stocks will be way worse than this. If the S&P is down 50%, there will be stocks down 80, 90+%. I don't want to touch those stocks with a 10-foot pole. Okay. So this is why I tend to stick with index related trading or index related instruments, because they're far less volatile and you don't have to be perfect. You don't have to be a stock picker. You can just trade the basket, own the haystack, and there's plenty of needles to make up for a good overall market. But also my favorite part is when the market's down and having a terrible year, it's down what, 10% at a peak to trough. It's down 20%, 30% for a nasty, nasty drawdown. So I just think it's a little bit easier to survive. It's never fun, but it's easier to survive. Okay. All right. Hopefully that helps. Just making some sense of things. It's like, this is why I don't mind having cash on the sidelines, because when it is available and presented to us, we can take advantage of putting that capital to work and generally getting a lot of like months worth of income all around like a VIX event. VIX goes up, I can stagger months of expirations and take some premium and make some money. Now, this year, with the political risk we have coming in November with the midterms, a lot of my bullish stacked positions are going to be out to October. I think October is fine as far as like this run up into the election if we get that. But October to December, if the market is excited, if the market's excited in any way, shape, or form about the results of midterms, then the market just keeps making all-time highs. But if we have a complete flop from Trump and Republican majority in everything political right now into the Democrats take a big fat majority, I do see the markets, really contemplating this like policy risk, because we roll back what tariffs, we roll back just pretty much everything that Donald Trump put into office with executive orders. It's like, who knows? I'm not saying it's going to be great. He's still president, and he can kick and fight, and he'll throw executive orders, but it's like they just all get shot down and he becomes like a lame duck president, which I think right now for what our country needs, we don't need that. We don't need, Trump to be in office as president and then have no power to get things passed through Congress. Right? That essentially renders the majority useless. So that is what I'm legitimately talking about this year, is like we do have some political risk. But if the markets are somewhat excited for whatever reason, like obviously we look at like year-end rallies to continue to be pretty decent. Okay. He'd be a lame duck if the Senate and the House went to the Democrats. They would pass nothing. Everything that he put out there would have to go checks and balances to Congress, and it all get shot down. So anyway, that's a to be determined. That's nothing political. I'm just saying like that changes the power dynamic of Donald Trump if the midterms swing hard to the left. And that's not the answer. That's what's so stupid. It's like a two-party system. We have a douchebag or a turd sandwich. That's a South Park episode. That was with I think that was with Bush or Gore. It was, you could vote for douchebag or you could vote for a turd sandwich. I don't care who the president is. It's like Trump is a very vocal president. Like him or hate him, he's one of the most polarizing figures we've had in our history. I think we're doing some things that needed to be done. I think he's unapologetic and he's a little volatile. I think what I don't like about just the Trump administration is like, it's so noisy. As a trader, it's so noisy. And never has there been so much saturation and crossover between politics, policy, and now the markets. Because you want to know what the markets really care about? The markets care about earnings and interest rates. That's what they care about. But now the markets have to care about everything Donald Trump's going to say and everything that our country is doing policy-wise. It's like, it's usually not that intertwined. So that's why it's a lot of noise. And it gets exhausting, because all I want to do is find good opportunities to trade. Right? So anyway, but I think if the midterms, like, people feel like I'm unhappy, I'm on the bottom of the K, I'm going to vote this other way, I don't think that's the answer. Like that's what sucks, is we don't really have an alternative. So I'd almost rather see, for the sake of the market, I'd rather see the Republicans maintain the midterm elections, because I don't think that going backwards and regressing and saying, well, this is what Donald Trump did, we're going to take it all away. It's like, that's not the answer. So I just don't think we're doing anything that is, fiscally responsible and, I guess, socially liberal, socially progressive. Like that platform doesn't exist. The middle ground in this country doesn't exist. It's like you got to vote one side or the other, this extreme to this extreme. So anyway, again, it's not trying to be political. You can save your opinions. I'm not saying I like or dislike. I'm just saying that there's a lot of noise that we have to deal with as traders, and that can be it can be exhausting, right? And here we are. It's January 21st to kick off a brand new year, and we're already seeing some noise. That's okay. I think we're going to deal with a lot of that, right? A lot of that will be 2026 will be noise. Keep your eye on the prize. That's why I posted in Telegram yesterday. See the forest through the trees. Okay. If this market needs a correction, with this rising wedge, well, guess what today is? Today is we break structure, we pull back, we form a lower high, and we fall. That's what this is. Okay. If we have a correction, market's right back up to highs again, I still think this is a questionable top where the market could roll back over again. Right? I'd be more surprised to see the market make highs and stay higher, just because, it's been a long time coming. We had this crazy reflexive rally that I could see at the very least the market struggles to make really any headway. This could be a tradable range for the S&P that we will have to navigate. And there's not a lot of damage to the downside, which means we can get paid for selling premium. And there's not a lot of gains to the upside, which is where those chasers and leaps and all the crazy momentum traders are going to get burned. So I don't want to be chasing to the upside. I want to be selling premium. If the market stays just stable, we're going to make a lot of money safely. Make sense? So for me, it's like I'm totally happy with that type of setup. Is let's make a lot of money safely. We can grind it out in here on a day-to-day, week-to-week basis, and that's okay. But big picture, it's like, let's see if the market could just kind of hold and maintain some resiliency. All right. Anyway, I guess that's my PSA for the day. All right, let's check in a couple of things. Gold. It needs a pullback. I'm going to do this. Let me find where 600 bars are at for a time frame. Okay. I'm going to make a bold forecast here and say that by 625 bars that we've had a pretty decent pullback towards the 200-day moving average. So I'm going to forecast this out. Right now we're about 583 bars. If we go to 625, that puts us out to about the end of March. So I'll make a forecast here. And again, if I'm wrong, I'm wrong, but I'm going to say end of March, gold showing signs of correction to 200-day EMA. So let me timestamp that one. I'm just going to put a vertical line here, end of March. Okay. So on a daily time frame, that's our trading window, right? So I'm cautious of buying these highs on gold. I'm still participating, but not as heavy as I want to be. And so what I'm doing on gold is I want to have some trades in here to buy discounts. Okay. And what I don't know is that let's say we run up hotter and higher and we hit, $5,000. If there is some heavy profit taking and this thing rolls over, a little correction, little whatever, a little distribution, and it rolls over a little bit, I don't know if there's going to be bigger catalyst there. That makes sense? Bigger catalyst meaning like, let's say the bond market does something that breaks. Let's say the dollar does something outrageous where it's like anything that could really correlate to gold inversely. So if the dollar's up, gold tends to be down. If bonds are up, gold tends to be down. So if we see a big recovery in bonds or we see a big rally in the dollar, I could see the gold market taking a step back, right? I don't know yet. But going out 625 bars, I do think it's going to be at least noticing some type of pause, at the very least pause, but hopefully a correction that I want to be ready to, buy with open arms. I still think gold's a great trade. It's just give us a discount, man. I don't like buying these runaway highs. Okay. All right. XOM is not in your options edge tracker. Did we XOM? Oh yeah. Did I put it in the tracker? Sorry. Hang on a second. I put it in the Telegram channel. All right. Hang on. It is in Telegram. Project options edge. Okay. Yep. I'll add it in trade number 95. Oops. So it's 121. Okay. Those 210 credit. Okay. Got it. All right. It's in there as trade number 95. Okay. Telegram's been updated. Tracker's been updated. Okay. Sheesh. It's going to make me sacrifice another 10 cents on this. Try another 10 cents here. What? Buy, sell, buy. Why the heck not? It's a butterfly spread. What are you talking about? Call side there. Oh. Okay. Let's try. Here we go. Come on. Don't make me sacrifice another 15, 20 cents. Did it get canceled? That's in. I got canceled. Darn it. So what I'm looking at is I don't think we're gonna get to 69, but I need to have some type of defense in here if that is the case. So if I sell, nope, I can't do that one. This is probably the safest defense trade I can put in that's really cheap. What in the heck, dude? Something's going on with Tasty. It's like sufficient funds, like the fudge. We got 70K in here. What are you talking about? All right, hang on. I'm going to log out of Tasty and log back in. It's being weird.
Hey Chris, just a heads up, my tasty's been being weird too.
Has it? Okay.
Yeah, so you're not alone on that
I
one.
saw it in the chat. I was just wondering if anyone just shut it down. But yeah, that's obviously I'm going for a trade that should cost me no more than like 20, 30 cents. It shouldn't be saying I have insufficient buying power.
Yeah, when I saw you over here, I was like, wait a minute. I was like, he's having the same problem I'm having.
Yep, I'm logging in now. I'm sure, and honestly, Tasty's good about resolving things pretty quickly. So I'll log back in, see if that fixes it.
Yeah.
Brett says reload still have an issues. Okay. All right, let's go DeVos summary. This is from a kind of a chucklehead. So, uh, all right. Anyway, this guy, Harris Kupperman, he basically he's been crapping on AI for like 6 months. He's like, yeah, they're asking for trillions of dollars so I can make more memes. Anyway, Lucid is up 15% right now. A little EV play, oldie but a goodie. Okay. Well, here's where you can sell. There's an issue. Right now I can't even get data for half my accounts. That's cool. So instead of $5.3 million, apparently I've lost everything. I'm down to 1.8. That's a problem. So, all right, I'll let this just resolve. I'll call the trade desk and see like what's going on. I can call them in a little bit. That seems very weird to me. I can't see trade history. Same. So working orders, I'm not seeing anything here. Let me do a quick speed check on my end. Make sure I should be plugged in and let's go speed check. Make sure I'm still pushing fast internet. Yep. All right. So that's not the problem. Definitely just a broker issue this morning. Tried mobile, web, and desktop. Yeah. No, I didn't think it was me. I'm just obviously I don't want to go like trading blind here. It's like, oh, all my accounts are zero. Yeah, that's clearly wrong. So I'll log out and I'll give it till the top of the hour. I'll go back in 11 o'clock and see if they get it resolved. Okay. I'm sure they're actively working on it. I'm sure their phones are blowing up trying to get things fixed. In the interim, I know where our trades are at. We need to see price hopefully. I mean, what is going to be really interesting today, gang, is let's say that we fill a gap today. If we fill this gap today, guess what trade looks really good? Even though I thought it was a crazy inexpensive trade, that 15 wide butterfly is worth $1,480. I mean, even if I can get that thing to pay me 1,000 and I wash my risk for 860 on the daily profit play, still walk away with a couple $100 on the day, like that would be victory. Now, look at what price is doing, by the way. Remember, we had a plus minus 54 points in the day. What has the price done so far? It's already at 51 points. So I'm just throwing it out there like it could very easily hit about a 50 to 55 point move to the upside, stall, and then retreat and be a totally efficient day. So, this is pretty atypical where it's like the market's just straight up all morning. We've had a couple of pauses here and there in the 5-minute time frame, but it's been mostly straight up since the open. 50 to 55 points is about the expected move. Question is does the market actually respond to that? If it doesn't, we've got protection up here, which is needed, obviously, if it's going to breach, 68.85, but I hope that it doesn't. So based on our opening price, my strike is 66 points higher on a plus minus 53 on a VIX that's retreating to 17.4. And I mean, we really shouldn't see the market going higher than like 55, 60 points on a close. Okay. All right. Just try to enter the order, said issues sent department trade. Got it. Yeah. I'm just going to let it hang out for 15 minutes, see if they can get it resolved. What I'll do is, so in between our sessions between now and the masterclass I have for engineered options at 11:15, I'll jump on the phone to see if I can get a hold of the trade desk and see if they have an ETA for that to be resolved. And if they do, then we'll get it resolved by the end of the day. Okay. All right. How about this? With everyone that's in the room today, daily profit play, we're active, we're managing. We'll see what happens. Plus or minus 55, we should see the market stall out here and maybe a few points. We have that gamma level at 60, 65, so that's been hit. Okay, so here's that gamma at 60. We creep up to the 100% ATR, that's 70. There should be some resistance up here, even if we get all the way to this top gamma level, that's 85. That's literally my daily profit play. So to close above that should be pretty slim. And part of me wonders, and again, this is just thinking out loud here, if we see the market going up by probably 3 p.m. today, if we haven't already started to make a move lower, by 3 p.m., I might look at taking a very cheap debit spread and try to pay less than $1 and try to get this thing to settle for, $5 to $10 profit at the end of the day. That might not be a bad play. So just thoughts. It could be risk, it could be worthless, but I think it'd be very difficult for the market to go all the way down and close at the low of the day, and then go all the way up and close at the high of the day. So my hope is that, if we're going to make this like just the market taketh and the market give it right back, like this is an impressive market. It's certainly a lot better to have, like, okay, if you have to deal with the day of pain, it's nice when the market delivers the exact opposite the next day, right? So anyway, but if we're hitting like 68, 85, 68, 90, 6,900, obviously I want to get into my broker platform and check and see how that butterfly is doing. But also it's like, if it's cheap enough to take something end of the day, if the market is going to roll over at all, there could be a way to turn like a dollar debit into, maybe $3, $4, $5, $6 plus a profit if we have a drop at the end of the day. Which I'm kind of hoping that we can get that. It's just, I'm not going to call the top now. I think if we push higher, remember, this was my kind of VIX calculation based on the high at like 20 plus, we go 1.3%. My VIX top would be around 69.05. So if I want to call the top for the day, I'm either going to do a credit spread at 69.05 and call that, or I'm going to do what's even cheaper and better is a potential like 69.10 by 69.05 debit spread, or 69.10 by 6900 debit spread, and see if I can get price to push back down and turn into like an asymmetrical trade. So this would be pretty fantastic. Is we're taking our level using the higher VIX. There is, probability wise, there is no reason for the market to be closing above 69.05 today. If it gets there, okay, fine, but it shouldn't be closing above it. So if we're going to test this area, I'd love to, be short that for a few bucks. Okay. So we'll see. And again, plus or minus, I said 54 points. It was 53.40 on the day. We open here. We've already pushed 54 points. Guess what? Anytime this market feels like acknowledging that was a market maker move on the day, if it's going to go back to efficiency, we start dropping, anywhere between now and the next like 5 to 10 points. And if we pull back halfway, fine. At least the market put in, like, there's our bottom of the day, there's our top of the day, and then now the market does whatever it needs to do for the rest of the day. It's still between our daily profit levels, and we still carve out a winner. Okay. So it's all prepped ahead of time. Like, we know this stuff going in every single day. Let's see what happens. All right. Any final thoughts, questions? I was going to get one more thing. So, we have a bunch of new traders that are popping in every single day. We got a nice trade on waterfall income yesterday. Engineered options run a masterclass today at 11:15. Project options edge. I've been pretty active. That's what's going to happen when we get a VIX flare up. I tend to get pretty active. That'll be a nice way to post some trades. Let's see here. We've been posting the one trade mastery, practical options inside a lot of the lifetime courses and a project engineered options. What I was going to say is, for some of these lessons here, I was going to do this for one of the copywriters that we have, Sean. He was asking of me if I would consider buying Ford. So Ford is at 1350. I think I still have some shares, or it got called away. Oh shit, I gotta log back in. I've had Ford down to a cost basis of like $7 and change. I don't think that I called it away yet or put in a covered call. Or if it did, it was like a $13 call that I was long at like $7. So I would have called away for maybe, I had like 500 shares. So it would have been a $3,000. But anyway, Sean was asking me, is this a good company to put puts on? And to be fair, it's probably stable, but you're not going to make a fortune on it. The premiums are going to be pretty terrible. What's been more surprising is the run in GM versus Ford. I think that there are companies that will be supported by the U.S. I don't think they're ever going to go out of business. I think if we ever have a problem where it's like, with tariffs and automakers, it's like, I don't know, maybe the government buys Ford, which is totally unfair, but I'm just thinking out loud, I guess. But the issue is, it's like, where would I want to own Ford? Not at 1360. I owned this thing during COVID, and I ran this thing from like $7 to $20. I was stoked with that trade. And once we pulled back, I started to get back in at 10, started, averaging in. and worked my cost basis down, some covered calls and stuff down to like $7. So long story short is if I could sell a put on Ford at like $10, that's not a bad trade. We have lows here at like 867, but the issue is you're not going to get a lot of premium for this. Okay. All right. Now I'm still I'm still missing accounts here. What? Oh yeah, I still have a bunch of accounts at zero. Gosh darn it, man. What up, Tasty? Anyway, let me check forward. I don't know if this is going to be like an accurate feed now. So if I go forward and I want to do like a January 2027, I mean, yeah, the put side, you're just not getting a lot for it. I mean, you get $1 to own the shares at 1085. This is all crap. This is your log out of this shit. It's so annoying. All right. Well, this is not the day that I want to be trading blind. It's like I've got some trades in. I want to be able to manage this stuff. But obviously, the most important thing is I know where my trades are at. So if we're up here, I have some defense. What I'd like to do is try to get something in around that 69.05 because I think that's a way to either one, like mathematically kind of call the top today and see the market retreat from there. I think we can get some high reward to risk setups. But I certainly don't want this market to be pressing above my 85 to 90 zone, 85 to 95, without having the awareness of like, where are my trades? Where's my defense at? How are we doing? Right? We'll see. Here's what I'm seeing in the live price. Once we got through the big gamma level at 68.60, that 100% ATR, this should about cap the market out. As far as the close of the day, obviously the market can do all sorts of stuff. We are chewing into the gap from yesterday. That's not a huge surprise. But if we get there, this is where the sellers would say, okay, congratulations, you had your fun. Now it's time to rebalance this. So anyway, all right. What I wanted to ask for everyone that's still here, are there any lessons we could sprinkle in? So I've done this before. Like we break down a trade strategy, anatomy of trade, strategy breakdown, finding break-even levels, especially when trading options. It's really important that you find your break-even prices. I'd be happy to revisit this segment. If we did like a ratio spread, we do even like our, iron condors or debit spreads or credit spreads. Finding break-evens are really important in trading. Covered calls, debit spreads, credit spreads. Somebody's asking about diagonal spreads. Sure, we can do diagonal spreads. Rolling calls, butterfly spreads, at the money versus in the money, out of the money, earnings, long calls, long puts. When assigned, this happens a lot. If you ever heard about the wheel strategy, this is what I tend to do when I'm assigned. If I have the capital and my initial plan of the trade was I'm willing to own it to repair it, then when I get assigned, I'm typically with my break-even price. Okay, so with my break-even price, and if I'm assigned, I'm repairing the trade for income. So if I were to do, here's just an example on like a white space. So if I were to say, okay, price is here. So I say I'm going to sell a put right here. Okay, so I'll do a -1 put. And let's say by the time we enter that trade, 60 days later, the market is down here. Okay, and then the broker assigns us. Well, what I need to know is, so now I own the shares. Let's say the broker assigns me and I now own. So I'll type in, so price is here. We put in our trade. Price goes down. We get assigned. So my break even is going to be my sell put strike minus the sell put credit, right? And so let's say that puts my break even to like right here. Okay. So if I just did a naked put, that's the wheel strategy. You collect the credit up front. If the broker assigns you because we're below that price, you know that you said you're willing to own it. Now you do, and your cost basis is that strike minus the credit. Now, what I would be doing is if my break even point is this green line, what I'd be doing is putting in a let's go. I don't want to make these colors confusing here. I would sell. Okay, let's say I'd sell a covered call right above my break even or at my break even. But what that should do is that will move my break even price a little bit lower. So if my break even is now down here and the stock can rally above my sell call, what happens to my trade? Okay, so I'll walk you through this again. Prices chopping around. I decide this is a level I'd be willing to own it, so I sell a put. The price falls below that level. The broker assigns me those shares. So I own the shares with the credit that I collected, that's now my break-even price. So immediately when I own the shares, I can add a covered call to repair them for income. So I sell a covered call, collect more credit up front, lower my cost basis. Now, if price rallies back above here, I'm going to get the shares called away, but my profit is achieved right there. So you go from the price drops, you get assigned at a discount, you work the cost basis down, you sell a covered call, you collect the income, you get called away for profit. And even though the stock was down, you can repair it. Typically, when I do this, I'm typically repairing stocks for like a $500 to $1,000 flip. It does take some capital to do that. But that's why when I take these trades, I say I'm willing to own the shares, and this is what my plan is. If I can own them and flip them for a couple bucks, like say I get $1,000 every time I flip a share. If I had to do that, 10 times a year, it's 10 grand, right? And if I like something, I want to hang on to it longer, then I can hang on to it I'll just wait to cover it up here. So price gets more appreciation, then you cover it, and then you get a bigger profit. Just depends on how much you like the trade. So anyway, we can talk more about that. I just think there's a lot of ways to do it. Selling puts is a little bit more capital intensive. Owning shares is a bit more capital intensive, but it is also very profitable. Okay. NP is naked put. Yeah. Yep. I still use a wheel spreadsheet. Oh yeah, I still have the one from that was the old debits credits strategies or spreadsheet we did for I don't even know what that was. Maybe 5-6 years ago now. Profit trap better. Okay, we can talk about that for end of day or EOD. Yeah. Okay, so let me do this. Let me ask a quick question here. We'll wrap up in just a couple minutes. Give me some subjects. Topics for some additional education segments. So I saw diagonal spreads earlier this morning. Diagonal spreads. I'd like to go into the wheel strategy, and I'll put my new and improved version. I personally like the wheel strategy, not with naked puts, but either credit spread or ratio spread because I can calculate a lower break even. Okay, what else? Calendar spread. Okay. Calculating break even. Ratio spread. Okay. Butterfly. And then profit traps. Got it. Engineered options and other items. We'll talk about that today in Masterclass, David. I think we can. It's we did, but you just have to like the asset. If you like gold, engineered options for gold. I don't know if I'd trade it as much as the weekly, week to week, but it depends on what the setup looks like. We can certainly look at it. Hopefully by 11:15, my broker is, kind of fixed. So I'd like to call them in a couple minutes to make sure hey, you have an ETA and when this thing's going to get fixed because I'm showing 10 accounts are zeroed out, which obviously isn't right. All right. Rolling strategies. Okay. Rolling. That's always a good one. I've got some best practices there. I mean, you have to realize that when you're rolling something, you're taking a loss and rolling to a new position. So I've done this many times where I am upside down on a call. The call is actually losing, a covered call is losing, but I can roll it out for a net credit which takes in, I eat a loss on the close position. I open up a new one for excess credit, and it's repaired in the accounting side. Um, Typically when I roll, it's like I have to be out a little bit further. I never roll like short term stuff. If I'm out a day or a week, I'm rarely rolling that trade. Okay. Usually when I'm rolling stuff, it's going to be, um, like 30, 60, 90-day minimum trades. Obviously, the easier trades are rolling when you get like, 6 months to 12 months. Calculating, is that return on risk, Kent? Return on risk? Yep. Okay. So calculating risk. Calculating risk reward. So return on risk, return on investment. Okay. Good stuff. What else? How to trade in volatile markets, stay successful in your trades, earnings plays. Okay. Trading, higher volatility markets. These are all good. Imply volatility effects options. Okay. Good. Okay. I'm going to save the screenshot. We'll come back and we'll tackle these, throughout our segments, and we can throw in some education. I'll keep this as a reference. So let's go CP daily lessons. Okay. So we got requests. ETFs. I mean, have your pick. There's I don't even know. There's hundreds and hundreds of ETFs. You got to be careful with ETFs because they're great. Basically, but they're so structured now that figure out what you're really trading. I mean, if anybody has like ETFs that are, I mean, I don't know, in some way, shape, or form, like the ones that are, it's like ETF with leverage, ETF with covered call strategies and yield max strategies, covered calls with this, structure this. It's look and see what's in the guts of that ETF. I mean, personally, it's like I keep the ETF stuff pretty boring because the reason people trade ETFs is because it feels like, well, that's easier to mean a stock picker. But if your ETF is a basket of stocks that are still correlated to tech or correlated to one particular segment of the market, that's just as subject to volatility and decline as everything else. So ETFs it's just become like a money making Wall Street scheme because demand is so high for them that everyone just loves ETFs. But at the end of the day, you're probably exposed to a lot of the same stuff and you have high correlations. All right. Yep. Let's take a break. 11:15. Come back to me. Engineered options masterclass. I'll send the alert out for Telegram, for engineered options Telegram for members, and it will start in about 12 minutes. Okay. Yeah. Let's see. That's just organizing your positions, right, Christian? So there's got to be a way. Is there a way? Anybody that's really savvy in Thinkorswim, is there a way to organize your trades? If you're trading with me on SPX or trading with me on XSP or trade with me and I trade SPX and XSP a lot. So the one thing I love about Tasty is I can always go in and group my trades and organize them. That helps me manage. I mean, I have thousands of positions that I'm managing throughout the year. So that labeling, just that little labeling, helps me a ton. There has to be a way that you can organize those trades. Even if it was like grouping them by strategy name, right? I mean, I don't know if you can edit it yourself or if Thinkorswim like automatically clumps them together, but there probably is a way. I'd be shocked if there wasn't. Allocate the trade. Okay, Blake. Yep. So let's look into that. Let's see. I use groups. That's not really helpful. Okay. So maybe we can talk about that more tomorrow. Right click and make a group, says Blake, to allocate the trade. Okay. All right. We'll look into that. That's just organizing your broker platform. Okay, I'll let you go. Let me get a small break in. Let's go 11:15 engineered options. And we'll see you in a little bit. Okay. All right, bye.
All right, later, Chris.
See you, Blake. Thanks.
You're welcome. Hey, are you doing your masterclass in this room?
No. I'm just gonna open up the engineered options classroom.
Okay.
Do you,
I
do you
was
need do you
thinking,
need
do
this?
you want me to stream engineered options?
Um
We
No,
can
let's do it tomorrow. Well, no,
tomorrow.
because it's still under my Zoom. So I
This
would
account.
need, yeah, it's under this account Zoom. So I would need
Okay,
that space.
that's
Let's
fine.
do the engineered options. I thought I was doing a standalone webinar today with Lance, so that's why I didn't push the stream today.
Oh, yeah, that's
But
fine.
we can do it. We can do a stream tomorrow. I think I have a solo read tomorrow as well.
Okay,
All right.
sounds good to
Okay.
me.
I'll see you in the master class in a little bit. Thanks.
All right, we'll see you.
Yeah. Bye.
Bye. Okay, guys, Chris is out of here. I thought we were going to be giving you guys a chance to hop into engineered options, but we're going to do that another day. So we're going to skip past that. And because Chris needs this room in just about 10 minutes. So no reason for me to stick around any longer. I'm going to close this up, let you guys go enjoy your day. Hopefully you stay out of trouble. Spy's running, probably inducing a little bit of FOMO at this point. So just be patient. Don't get suckered in.